What's up everybody, Jaspreet Singh here, and the single investment that really changed my life was when I made my first real estate investment. I bought a small condo out of foreclosure. This was at the bottom of the 2008 crash. I had no idea what I was doing. I didn't know any real estate investors. I don't have any real estate investor family members, but I bought this condo out of foreclosure and I rented it out, and that was the first time I experienced any sort of semi-passive income. I call it semi-passive income because it was anything but passive, because I had to learn all the mistakes. I had to go through a bunch of mistakes. I had to learn all the ways to invest in real estate the right way, find the right team, find the right contractors, find the right attorneys, find the right everything to manage and deal with this property the right way. But for the first time, I started generating cash flow without me having to do something. And during that time, I was still an entrepreneur, but I was running an event planning company. And then the only way that I got paid was if I hosted an event, if I hosted a party, if I hosted a concert, some show. If I didn't host an event, I wasn't getting paid. And I was generating some cash while I was doing this event planning company. And that cash was sitting in a bank account. And that was when I was reading some business books, and every business book said that wealthy people invested in real estate. I had no idea what that meant. Like, I didn't know that you could own real estate and rent it out. That concept was completely foreign to me because nobody told me this. I was not exposed to any sort of financial education. And so I read these books to talk about how wealthy people invest in real estate. And this was at the bottom of the real estate crash. So any article you went to go read on CNBC or Yahoo Finance kept talking about how real estate prices are rock bottom. So that was when I decided that I was going to go out and invest in some real estate. Now, I was very fortunate because I was able to find properties for extremely cheap. Like, my first real estate investment was a condo that I bought out of foreclosure for $8,000. That was the total price of the condo. And that sounds crazy, and it is. But what's even crazier is that same condo that I bought for $8 grand out of foreclosure from the bank was selling for 150 grand just a few years prior. And when I found this condo, I didn't think it was abnormal. This was completely normal to me because there was nothing else that I was exposed to. There was nothing else that I had seen. So I ended up purchasing the condo. It was listed for $8,400. I bought it for $8,000, and I was able to rent it out for $600 a month. Now, again, this was the first time that I ever learned or really experienced this whole idea of how assets can pay you and pay you to really have this sort of financial freedom. I was never exposed to that. And I was running my event planning company, and if I wanted to get paid, like I was saying, I'd have to host an event. I had to physically do something, perform something, be somewhere, and then if I did something, then I would get paid. If I didn't host an event, there was no money coming in. But with real estate, once I owned this asset, this building, this condo in this case, but then it was homes and apartment complexes. Once I owned this physical thing, well, then this thing can pay me cash flow forever after that, essentially, if you have a tenant in there that is going to be using the property, living in it, and they get to use that value, and they'll pay you in exchange for that value. It's rent. And so this is where things started to really click for me, where wealth, true wealth, is built from owning these types of assets. Now, I like real estate investing. I don't actively invest in real estate the way that I was before, just because I'm so heavily investing in my own business right now in market briefs, but I still own real estate investments. I'm still always looking for properties. But the thing that I want to talk about today with real estate investing is the real value that you can get. Because if I didn't learn about how real estate investing works, I would have never gotten started with real estate investing, and my life probably would have been very different. So I'm trying to really just kind of spread that awareness of what real estate investing is, how it works. That way you can be aware and make better decisions with your money. Because the reality is, with real estate investing, it is the clearest example of owning an asset that will pay you with cash flow, where if you own enough of these assets, it's like monopoly. If you own enough of these houses, well, then you will be able to live free, do whatever you want, and your assets will pay for your lifestyle. Because the way that it works is, if you own a property, let's talk about a home. This home can then pay you because a tenant, a family, might live in that home. They like the property that you give them, and because you're giving them nice value, a home, they will pay you in exchange for that. They pay you rent. Now, the nice thing is once you own the home, you own it. You don't got to do anything else. Like, yeah, you got to keep up with the upkeep. You want to make sure that they're paying. You got to do all that little day-to-day stuff, but you don't have to be the one that physically does that. You can hire a property manager that will now do that day-to-day work that will make sure that your property is rented out and that your tenants are paying you and that all the repairs are taken care of. Now, when you are looking to invest in real estate, there's a big debate here on whether or not you should hire a property manager, because a property manager is going to take anywhere from 4% of your gross rental income to 10% generally, sometimes a little bit higher, but 4 to 10% of your gross rental income, depending on how many units you have, depending on how well you know the property manager and how many different things that they do. Now, what I would like to say about that is I 110% believe that you need to have a property manager, because if your goal is to really own the asset and be an investor, your job is not to fix the toilets. Your job is not to find the tenants. Your job is not to sit there and deal with any day-to-day issues that might come up. Your job, your time, effort, and energy should be spent trying to find more deals and do more real estate investments. Yes, there is a fee for hiring a property manager. They're going to take some of your revenue. It's going to reduce some of your profits, but it increases your time and it decreases your headache. It decreases the stress, because now you can focus on the other things. And now you have this asset, which is now passive because you have a property management company that's dealing with the day-to-day stuff. And now this asset is paying you every single month. Now, the nice thing about real estate is if you do it correctly, your rent that you're getting from the tenant will pay for your property taxes, your insurance, your maintenance fees, your management fees, and any potential mortgage that you have. So once you pay for all those expenses, then the extra cash is the money that goes into your pocket, which is now your profit. And then the reason why wealthy people love real estate investing so much, there's two reasons. One is you own a hard asset. The second is the tax breaks that you get. So talking about the hard asset before I get into the tax breaks is when you invest in real estate, you own something that you can see, feel, and touch. If you go and invest your money in the Amazon stock, well, everybody knows what Amazon is and you become one of the owners of the company, but it's very volatile. You could see a stock market crash happen essentially overnight, and the value of your investment could drop by 50% overnight. And you have no control over your investment, because if Amazon runs their company into the ground and they go bankrupt, well, there goes your investment as well. So you don't own anything tangible. You don't own anything real when you own a paper asset like a stock. Versus with real estate, it's different, because now you own the land. You own the bricks, you own the building, you own the windows, you own the doors, you own the carpet, you own the actual infrastructure, the building. And so you have something that you can see, feel, and touch. And even in the worst case scenario, it's not going to go down to zero, because you at least have something that should produce value. And even if there's no building, even if the building burns down, you should at least have the land. And you can have insurance as well when you are a real estate investor, and you should have insurance, which will then also insure your property. So if the property does get burned down, that the insurance would then come in and pay you for that. So the benefit there with real estate investing is it is a way for now you to store money, because it's a real asset. Now, this doesn't mean that the price of real estate only go up. I mean, you can see real estate prices go down. We saw this happen in 2008, right? I mean, real estate prices don't always go up, but the way that I invest in real estate is I don't invest in real estate for appreciation. I don't really care what happens to rental prices, or home prices in 2 months or 6 months or a year or 5 years. The one thing that I'm looking for is rental prices. And even if we see rental prices go down, you know, the way that I structure my deals is I always create margin, where it's not every dollar that comes in is every dollar that goes out. When I invest, I'm looking for a 7% cash on cash return on my money, meaning for every dollar that I invest, I want 7 cents of positive cash flow of profit from the rent after paying all of my expenses, excluding any mortgage costs if there are any. So this gives me margin that if rents have to go down, that's okay. I can reduce the rents, be competitive, and continue running the business just like normal, and it's passive. Now, talking about the tax breaks, the second reason why wealthy people love real estate investing so much is because of the tax breaks. And as an attorney, who's not your attorney, I can tell you that real estate provides some of the biggest and best tax breaks that the IRS tax code has to offer. And the reason why is because you can take tax deductions against your cash flow, the profit that you get every year, and against any profits you get from selling the property. This is why so many real estate investors can make so much money without paying a penny in taxes. And so the way that works is when you generate your cash flow, let's just assume you make $10,000 over the course of the year in profit. So you have $10,000 in your bank from cash that you made. You can then take paper deductions, meaning you can tell the IRS, hey, I made $10,000 worth of profit. However, I deserve an extra $3,000 to $5,000 to $10,000 worth of deductions. I'll explain how you calculate that in just a second. But I deserve these extra deductions because I'm a real estate investor. This is called depreciation. And so what you can do is you are going to depreciate the value of the building. So you're going to look at your accountant. You should have a good tax accountant to help you with this. You need a good tax advisor and a tax accountant because they're going to help you get the most tax breaks out of your property. But essentially what they're going to do is they're going to look at the price that you paid for your real estate. And they're going to remove the price of the land and only look at the price of the building. And then they're going to take the price of the building and take a fraction of that. It depends on whether it's a single family home or an apartment complex. It's going to depend on what type of property it is. But they're going to take a fraction of the value of the property, and they're going to just reduce your taxable income by that amount. So if you make $10,000 worth of profit, they might reduce $5,000 worth of your taxable income from your taxes, meaning you only pay taxes on $5,000. Sometimes it might even be $0,000. So you have $10,000 in the bank, but you're paying $0 in taxes because of this depreciation deduction. And essentially what this says is because this asset, my real estate, is 1 year older, I deserve a tax break. So you can depreciate the value of your property. And when you have a good tax advisor, they'll also be able to do more nitty-gritty types of depreciation. They will look at the value of your carpet, of your fridge, of some of the other things that you have on the property. And then they'll also depreciate the value of these things against your real estate to help you lower your tax liability. And yes, it is legal. The IRS tax code says that you can do it, which is why you want to understand it and be able to use it. That way now you can make money, make passive income, make this cash flow, and pay little to no money in taxes legally. And then when you go and sell the property, that's when the next round of tax breaks start to hit, because real estate also has something called 1031. And 1031 essentially says that you can sell your real estate property for a profit and pay $0 in taxes if you take all this new cash and use it to buy a bigger or another piece of real estate. So if you buy a property for, say, $500,000, and a few years later it goes up in value to $1 million, well, now you can sell that property and you have $500,000 of profit. You have $1 million in your bank account, $500,000 of that is profit, which is normally taxable. If you sold a stock after it doubled, you're gonna have to pay taxes. You can't do this in the stock market. But with real estate, you can take all $1 million now, go out and buy an even bigger property, and this bigger property will pay you with bigger cash flow, more cash flow, meaning bigger depreciation, deductions every year on your taxes, and you can pay $0 in taxes on all of that profit, on all of that $500,000 worth of profit, because you did the 1031 exchange. So now you have more checks or bigger checks coming into your account every month. And then you're gonna take a bigger depreciation deduction on your annual income every year. And then you didn't pay any taxes on this bigger sale that you just made, this $500,000 worth of profit, and you own a bigger property. So now you have more cash flow, you own a bigger property, you own more assets, and it's paying you more every month. This is why more millionaires are made through real estate than really anything else. And you know, the structure, if you look at kind of the financial structure of how you do this, it's the same with any sort of wealth building where you make money and then you spend money and you have a margin. Well, that margin, the question is, what are you gonna do with that margin? Because the easiest and simplest thing to do is just throw that money into the stock market, which is a great thing to do. I mean, I invest my money in the stock market. It is a great way for you to get exposure to the American economy, to get exposure to good companies. However, real estate provides a completely different value. It is outside of my own business and outside of business in general, it is my favorite place to invest. I like real estate better than the stock market because of the cash flow that I can get. Now, the stock market is exciting. Don't get me wrong. I like investing in the stock market because you can see all the excitement and the fun, and you can research companies. I like that. But real estate provides a whole different side of things where now you own something real, you own something tangible, and this thing is going to pay you, and it's going to give you bigger tax breaks. Because now if your goal is real financial freedom where you don't have to worry about how you're going to make money, you don't got to worry about how you're going to pay your bills. If you have enough real estate that's paying you enough cash flow to pay for your expenses, well, now you're financially free, because now your real estate is paying for all of your expenses, is paying for your lifestyle. If you know that your life costs you $5,000 a month, if you have $5,000 a month coming in profit from your real estate, well, now you're financially free, because wealth is measured in time. Richness is measured in dollars. When people talk about being rich, I have $1 million. Well, you're only rich for as long as $1 million is around, right? If you go out and buy yourself a nice Lambo, you buy a nice home, you go on a nice vacation, well, you're not going to be rich that long because $1 million is going to disappear. But if you spend $5,000 a month, that's your expenses, and your assets, your investments are paying you $5,000 a month, well, now you're wealthy forever because your assets are paying for your lifestyle, and you can do whatever you want. You can travel, you can live your life, you can go sit on your balcony and just relax and not have to worry because your assets are working to pay you. This is why, going back to what I was saying with the income versus expenses, when you have this margin, yes, the stock market is the easier place to get started with investing, but real estate provides a whole different set of financial freedom, a whole different type of investing potential, which is why I recommend real estate investing as a tool for really anybody who has the entrepreneurial mind, who wants to really build wealth, because it allows you to do that, because now you own a hard asset. You own a hard asset that's also paying you cash flow, and this hard asset that's paying you cash flow is also giving you tax breaks. So it's a win-win-win situation. The downfall is it takes more cash to get started. Buying a real estate property is not easy. It takes cash and it takes a lot more work. It takes a lot of time. You're gonna have to go through a lot of deals. I have seen, I don't even know how many, probably thousands of real estate properties over the last decade where there's homes, apartment complexes. I've looked at office units, mixed use type of buildings. I don't know, I can't even count how many properties that I've gone through. I mean, at least hundreds, but if not thousands. But I've gone through so many different units, and you have to go through, I think they say 25 units before you make an offer of one. And so it takes a lot of work, it takes a lot of time, and you have to be willing to devote that. But if you can do that, then you will set up that foundation to now become a real estate investor. And the first deal is always the hardest. By 2012, the stock market had fully recovered. But in 2012, that was when the housing market bottomed. So the housing market bottomed 3 years after the stock market crashed.
Wow.
And why? Well, the stock market has a lot of panic, it has a lot of emotions, and you can oversell very quickly because it's all